Hi guys, this is Dee. Welcome back to my channel. In this tutorial, we will learn about trends and candlesticks and will also learn how to identify buy and sell opportunities. Trends. To move in a general direction of price action is a trend. Can you guess the trend here? Yes, here the price action is moving in a higher direction due to active buying. And then here the price action is moving in a downward direction due to active selling. Uptrends. In uptrends, stock is making higher pivot highs and higher pivot lows. The red markings are the pivot highs and the green markings are the pivot lows. You can see the pivot highs are growing higher and the pivot lows are also growing higher. Depending on what kind of trader you are, you can break the chart down to a specific time frame and analyze. Like if this is a chart of 1 month period, you can break down the chart for the last 1 week or the previous day and look for the trend. Trends can be short-term or long-term trend. A short-term trend is used by day trader or swing trader or position trader. Long-term trend is used by investors. Classification of traders was done in the first tutorial. You can check that out too. Downtrends. When the stock is in a downtrend, you can see the red markings, the pivot highs, are getting lower and the green marking, the pivot lows, are moving lower too. This is due to excessive supply or selling pressure. Here again you can break down the chart to see the short-term or long-term trend. In both uptrend and downtrend, traders tend to buy at pivot low and sell at pivot high. Consolidation. Here there is no uptrend or downtrend. Even though the prices are fluctuating, meaning the prices are moving up and down, but there is no new pivot high or no new pivot low. We are bouncing between the pivot low and pivot high. Once a consolidation pattern is established, traders tend to buy at pivot low and sell at pivot high. So this is the summary for trends. An uptrend has higher highs and higher lows. Downtrend has lower highs and lower lows. Trendless or consolidation has equal pivot highs and pivot lows. A stock usually never stays in one trend. It will also break from one trend to another. So that's it with trends. Now let's move on with candlestick charts. In this video, the earlier charts shown were of line chart type. Line charts don't give much info of selling or buying. That's why most of the traders use candlestick charts. A candlestick consists of 4 data elements: opening price, price of the stock when the market opened, closing price, which is price when the market closed. High price is the highest price it reached and low price is the lowest it reached. In short, a candlestick provides key information about buying or selling action. So let's get more into it. The first one is the bullish candle. If the buyers are aggressive than sellers, price action is positive. So the closing price is higher than the opening price Or we can say we opened at the lower part of the body and closed at the higher part of the body. The body is usually white or green for a bullish candle. Bearish candle. If the sellers are aggressive, they push the price down. Like in here, we opened at higher part of the body and closed at the lower part of the body. Usually the body is red or black in case of bearish candle. Narrow range candle. This candle is small in comparison to the prior candles. Like in this picture, active selling is indicated by the three red candles. Then as circle, you can see a candle which is small compared to the previous red candles. This is a narrow range candle. It indicates that there is not much buying or selling happening. Traders make use of this indecisive period as a low risk opportunity to buy if the next price action is going to be higher. Bullish expanded range candle. Like in the earlier, let's say there was selling pressure as indicated by the three red candles. Unlike the earlier scenario, here buyers are more aggressive, which is indicated by this circled candle. As you can see, this one is bigger than the earlier candles. This also indicates the buying pressure being high and a huge potential for the price action to grow further. Bearish expanded range candle. An expanded range candle in general has a body bigger than the previous candle. Bearish indicates selling pressure and the prices are going down. Just like in this picture, the circled red candle shows aggressive selling and is also an indication that the upcoming price actions are also going down. Summary. Below the topics covered in the candlestick patterns, highlighted in red will be covered in the upcoming tutorials. Thank you for watching my video. Do subscribe to my channel for more interesting sessions. Thank you. See you.